Yeah, what's up, guys? Alright, so welcome back to the trade breakdown. Alright, so we're gonna make this fast. So, this is the screenshot of what we made today. That's about 673 bucks. Cool. So, let's go straight into the trade. Trading day. Right, so let's go back to 10 o'clock because we trade the 10 o'clock AMD model. Right, let's look at our daily buyers. Right, why does this keep coming here? Let me just put it at the side. All right, cool. So on the weekly, what do we see on the weekly? We don't. Let me off my viewer. All right. On the weekly, what do we see on the weekly? Nothing, right? Because it's going up, then it's going down. It's rejecting this. It's closing against this imbalance right here. So that is something that I will not even consider to look at, right? So we are kind of bearish on the weekly. All right, cool. On the daily, what do you see on the daily, right? The previous day reacted off a fair value gap and then pushing down, going into this, right? We swept the daily low, we swept this, right? We could be bullish, right? We could be bullish. I'm not saying no, we could be, but the last move was up because this move has not ended yet. So I would say the previous move was a bearish move, right? So I would mark this high right there, and I would mark this low right here, right? So that's our range on the daily. Now let's move down to the 4 hour. 4 hour, what is it saying? Same thing, right? So this daily is also a 4 hour move. Cool, right? Now this, what do you see here? This is a 4 hour swing high, right? This is also a 4 hour swing high. This is a 4 hour swing low. Cool, we've marked everything there. Now what is the 4 hour telling us? Right, we tapped into a 4 hour fair value gap and now we are moving lower, right? So we would expect the next move to at least hit this 4 hour low. So we are bearish on the 4 hour. Cool. 1 hour, what is 1 hour telling me? 1 hour essentially is the same thing, right? Look at this 4 hour right now just became a 1 hour move too. Cool. What is this 4 hour line telling me? It also tells me that we just became a 1 hour move too, right? Cool. We also have a 1 hour line here, right? Cool. What's the last move? 1 hour tap into this fair value gap, rejected. 2 candle theory, right? Rejected, going down. So we are bearish at least up till this point right here, right? At least up till this point. So with that being said, right, what are we on the 1 hour? We are bearish. So going into the day, what are we going to find? We're going to find at least a 15-minute or a 1 hour fair value gap to the downside, right? Because we're trading downside. And also, what else do you see here? We also have a 1 hour here, right? All this can be a potential take profit points or reversal points, whatever you want to call it, right? But right now we are bearish. Cool. But the fact is, we don't have any PDRAs on the 15 or the 1 hour, right? The only way is if we go up here, then we create a new one, or if we create one along the way, right? But as you can see, what price was doing, right, it was just creating bullish gaps and all that, right? So when it came up to this 4 hour plus 1 hour gap, I also realized, and I also wanted this to happen actually, because even though this was a mitigated fair value gap, right, this was the only thing that we had, right? But look at what else do we have here. We have a 15-minute, we have a 1 hour, we have a 4 hour, right? It's too much confluences, right? We have 15, 1 hour, 4 hour, and even this swing line that we drew there, right? The swing high, that was a 4 hour plus a 1 hour. So we have so many confluences telling us that there's something here, right? So we found an early sign of reversal on the 15-minute. which actually closed into this fair value gap and also above this line, right? If this was a sweep and then we had a reaction down, then we could have took that. But this is just telling us that okay, we are going down, we are moving lower, right? So what I did was I was looking for a bullish setup, right? Not gonna lie, because this is a 1 hour. So if we are showing early signs that we are gonna break this, then for sure we are moving up, right? So yeah, this was a 15 minutes. So I was like anticipating this to get tapped and then we can move higher, right? So I was waiting for the next 15-minute candle. Now, because of our two candle rule, right? Or two candle thing to look out for, right? Anyone who would have seen this would have think that okay, we are breaking this, so we are gonna tap and then go up. But not for me, because for me it was more like this. If you follow the two candle rule, this candle, the second candle, actually swept the first candle and closed. You can also call this a CRT candle, right? But this is the two candle rule, right? When the first candle shows that it's going to continue higher, but the second candle actually shows that no, this was a fake move, we are going to move lower, what would you take? Right? I would rather take a short, right? Since we had swept liquidity, we are in a fair value gap and all that confluences, right? So what I did next, went to the 1 minute, right? I was waiting for an inversion, but this looked too choppy, so I didn't like it. I didn't have that, that sharp move down, right? Was it the 2 or 3 minute? Yeah, it was a 2 minute, right? 2 minute was the highest that we would have gotten this fair value gap inversion. So I was waiting for that inversion to happen. We had this FVG right here, right? Let me just delete this just in case you guys might want to see this, right? So we're waiting for it, and bam, we had a inversion, right? So I calculated wrongly and I didn't enter it well on this re-entry that we got here. So this was like 100-point stop loss, so I didn't want to take that. So I went just above the body right there, right? And 1:2 was just here, right? Cool. So what happened? We got re-entered, we went down, and we hit full CP, right? That's about it. I'm deleting this because we already mitigated that. So we hit this, right? We hit 1:2, and we were done. We were done. Like literally, this would have been our break-even point, and we would have been done. But because I calculated wrongly, what I did was I didn't go break-even. I was waiting for another re-entry because I was confident with my bias, right? So we got re-entered there, right? But because we got re-entered there and we already took partials and all that, I put my stops around here, about 1:3. But I didn't get re-entered. I'm sorry. I took a smaller lot size, right? So for me, 600 would have been like a 1:3, right? So I had to wait longer, and then we went break even right over here, and then we just continued playing out, and we actually hit 600 around here. Yeah, somewhere here, right? As you saw on the where's my screenshot? Now the screenshot disappears. Nice. How can I see the screenshot though? Yeah. So as you can see here, right? We hit 600 plus, right? So that was cool. Before the price reversed, we actually managed to hit that 1:2, right? But don't get me wrong, right? Nevertheless, this is still a mitigated fair value gap. So this is like a B setup and all that, right? What do you realize right now, right? We tapped back into this 15-minute. Even on the live video, if you see it, right, I was telling them that we already broke past this 1 hour, so we could be going up. But because of the two candle rule, right, it's showing me that we have a chance, we have a probability to do a pullback or a dash through, right? So if this was a dash through, if this was really a dash through, meaning to go up higher, we would have a retracement. So this might have been the retracement. I even showed on the live video that I marked my fib to see where my 0.5 and which fair value gap it would react off, right? And good enough, it just reacted off that. So if you guys were to be like, you know what, I don't have a clear bias in this, I'm not confident in taking this, cool, no worries, right? Because you already know that we might be going above this, right? This could be a retracement. We just turned bullish, right? You would have waited for this step right here, right? Looked at which one was the highest time frame. In this case was 2 minute, right? A 2 minute inversion gap. Cool. You would have took a trade. Obviously not here because the fill would have been crazy, but if you were crazy enough, you would have still took it here, right? And aim to 1:2. And look at that. Look at that. You would have hit, right? And all because of how you see daily bias and early signs of reversal. 15 minute was already mitigated, right? But what did you see on this 1 hour and 4 hour gap? You saw it close. The first candle always tells you where the price is going to go. The 2 candle rule is just to tell you whether we might have a possible retracement or we might possibly not even be moving. This could be a fake breakout or this could be a retracement. That we will never know, but it's on how you want to use it, right? So for today, we didn't get a setup, right? We didn't want to wait too long, so we took a C or B minus setup, right? We still won, right? And if you were to just wait and just believe in your A plus setup that okay, we are turning bullish, I'm gonna wait for a retracement here and then I'm gonna take a trade, you would have still won. And this would have been at 11:17 to 11:30. You would have been already out of the trade, right? So with that being said, hope you guys found value in this video. See you guys in the next breakdown. Peace out.